One of the other things we're watching today is Bitcoin. It is headed for a record seventh consecutive weekly loss. Despite seeing a bit of a bounce back today, it is above the $30,000 handle. It has been a brutal week for crypto broadly, to put it mildly, with investors rushing for the exits following the collapse of stablecoin Terra. Let's bring in Mike McGlone. He is Bloomberg Intelligence commodity strategist. He's here to discuss all of the moves that have happened this week. Mike, let me just get your thoughts. Where are we right now in this space?
Well, I think the thing to remember about Bitcoin is, first of all, you mentioned 30,000. There's very good support, but it's going down with the ebbing tide with all risk assets. What happened to the S&P 500 this week? It finally got below 4,000 for a while. It's steadying around 4,000. But for the first time in about 2 years, both Bitcoin and the S&P 500 came back to their 100-week moving averages. And the question I like to point out for looking forward in the future, do we expect this nascent technology asset to stop outperforming the broad markets? And I think that's the opposite. I think you're going to see more responsive buying below the market in Bitcoin and selling above in the stock market. And that's playing out. But you have to remember, the asset that went up the most the last 5-10 years is going to come back as the Fed, hammers down and takes away the punch bowl, but it's more likely to come out ahead. And I think that's what you're seeing this week.
Hey, Mike, it's Brian Chung here. Great to chat with you. Let's take away the technical analysis and kind of the numbers for a brief moment. You have a lot of the commentary around the action that we've seen in the crypto space the last 2 weeks as, perhaps is this a Lehman moment? We know that Luna and Terra is not necessarily systemic to, especially not the financial system, but maybe not even to the stablecoin space. But look, when you see Tether, which is supposed to be keeping that dollar peg, blink yesterday in the morning, that's got to give you some concern, doesn't it?
Yeah, that's a lesson I've learned about Tether, Brian, is anytime you see knockbacks on Tether, it's usually a short-term blip in the market in Bitcoin and a long-term enduring bottom. The best example was 2018 or 19 April when New York Attorney General came down on Tether. It broke the buck for a little while. Bitcoin hovered around 5,000, and then it established an enduring support. I see similar things happening around 30,000. The key thing to remember about Tether, it's the most widely traded crypto asset on the planet. It typically doubles the volume on a normal day that Bitcoin does. And why? Because the world has found a better way for that buggy. It's got a car now in terms of transacting dollars globally. Yes, it's imperfect. And yes, what we're finding out is that, kind of the tide went out when finding out who's wearing clothes in cryptos is we're purging some of those speculative excesses, most notably in Terra USD, which was an algorithmic stable coin. I like to call them crypto dollars because they all track the dollar. But the point is what comes out ahead from this. And this is typically what happens in this space. You see these pretty significant flushes. It's a new technology. You purge them a little bit and then you reset. I think we're going to get towards that point of reset. Now, Bitcoin is the key focus. And remember what Bitcoin is doing. It's well on its way becoming global digital collateral, and it's going back to a good support within an enduring bull market. I look at it as an investor. What should I want to do here? Probably, I think we're seeing investors being responsive buyers.
Mike, I know with Bitcoin, we've talked so much about so many different correlations, and they never seem to really stick. But I will say, at least in this latest sell-off that we've been seeing, it has moved right in tandem with the equity space. What do you think that says about, number one, who's exiting? Is it really just about an overall risk-off sentiment, or is there something more?
Clearly the former. Overall risk off. The key theme for me at the beginning of the year is don't fight the Fed. The Fed is selling calls. They need risk assets to go down to reduce the ability for people to buy stuff where inflation won't go down. And some of the riskiest, most speculative assets were crypto. So what we're doing is finally purging the things like the dog coins and the Shiba Inus. That was overdue. And then we're coming back to what's really building in infrastructure and what's really happening. To me, that's what's happening with Bitcoin and Ethereum. So you hear about things like NFTs and tokenization. That's all being made happen by Ethereum. Now, Ethereum's come back to good support around 2,000. Bitcoin's back to good support around 30,000. And I think the key thing to remember, if the stock market keeps going down, which is likely, because the Fed needs it to go down to reduce inflation, Bitcoin and Ethereum will go down, but they'll come out ahead. And the key fact I like to point out is overall, the volatility of these nascent crypto assets, most notably Bitcoin, has continued to decline versus the stock market. That's what's happened with Amazon when it first came out. Remember its volatility in 2009 was about the same as Bitcoin is now. And look where it is now. To me, that's investors are looking forward to the future and is, do you really want to miss out on this revolution? And that's what I see happening. A little bit of selling offers in the stock market and bids below and things like Bitcoin in this area.
Mike, always good to have you on. Happy Friday. At least we can say that for one day. Mike McGlone, Bloomberg Intelligence commodity strategist.